Good afternoon, everyone, and thank you for joining us today. On behalf of Atlas Honda Limited, I would like to welcome all our analysts, investors, and stakeholders to this corporate briefing session, where we'll be discussing the company's annual results. This session is scheduled for 1 hour, with the last 30 minutes reserved for Q&A. Joining us today on Zoom is our Chief Executive Officer, Saqib H. Shirazi, and with me here in the room is our Chief Financial Officer, Mr. Daniel Ahmed. My name is Mahin Fatima, the Company Secretary of Atlas Honda, and I'll be coordinating today's session. We will begin with the presentation covering our financial performance, key business highlights, and sustainability highlights during the year, after which we will open the floor for Q&A session, where our CEO and CFO will be happy to address your questions. To start with the presentation, just let me share. I'll give you a quick overview of Atlas Honda's shareholding structure. Atlas Honda is a joint venture between Honda Motor Japan and Atlas Group. Honda holds 35% and Atlas Group holds majority around 55% combined, mainly through Shirazi Investments being the group's holding company. Moving on to our geographical footprint, our head office and one of our two factories are located in Karachi, with the second factory in Sheikhupura, registered office being in Lahore. We have branch offices and customer care centers in 6 cities, giving us coverage across all 4 major regions of the country. On the distribution side, we have a dealer network of over 800 dealers across Pakistan, supported by vendor ecosystem of 120. With that overview of our shareholding and geographical presence, I'll now hand over to our CFO, Mr. Daniel, who will walk you through the economic environment, industry performance, and company's financial results for the year.
Thank you so much. Sir. Thank you so much, Mahi. So first of all, I would like to brief you about the economy. The economy is showing encouraging signs of improvement, and the GDP is now expected to grow at 3.7% as compared to 3.1 last year. And the current account deficit has now converted into surplus for the May and June. And the workers' remittance has also started to show upward trajectory. The exchange rates have remained broadly stable, which has increased the investors' confidence, and also it made it easy to remove the uncertainty among the investors. The inflation remained anchored, but due to the war impact, it has gone up in the couple of months. And the state bank, in response to the growing inflation, has now increased the interest rates to 11.5%. If you look at the auto industry performance, the overall industry grew by 32%, with most of the growth shown in trucks and car segment. And the motorcycles have also witnessed, two-wheelers and three-wheelers have also witnessed growth of 32%. And the farmer returns show 1.9 million production in the automotive sector. Now I will present the annual performance of the company for the year ended March 26. The annual sales and production of the company was 1.6 million units, the market share of around 65%. The revenue grew by 34% in line with the sales volume. And the most impressive part was the growth in the gross profit, which was achieved through the cost reduction, continuous cost reduction measures, as well as the improved sales mix and the sales volume. The profit before tax percentage has also gone up, and the profit before tax is now nearly 35 billion as compared to 24 billion last year. Out of the 35 billion, 5 billion is non-operating income, and the rest is from the operating results of the company. The earning per share and dividend income of the dividend per share has also increased, which is now also reflected in the share price of the company, which has gone up from 943 to 1532 rupees by the year end. the total assets and equity, shareholders' equity are at all-time high of 5 billion and 47 billion, respectively. If we look at the property, 6 years at a glance, we can see here that the cumulative average growth in property, plant, and equipment has been 7%, which reflects the company's commitment to balancing modernization and continuous capacity enhancement. The current assets, the equity, and the current liabilities have all gone up by 20% figure, whereas the gross profit margin, the sales have gone up by 24%, and the profit after tax has shown figure of 42%. If you look at the GP margins, we can see the GP margin is at all-time high of 13.2% if we compare the last 6 years of the term. Now, I would like to mention about the two model launches during the year. One was the CT150 and one was the Icon-E. The Icon-E was the first EV bike introduced by Atlas Honda in Pakistan and by Honda company. And the second was the CT150, which was launched for the classic look with retro-inspired design blended with modern styling, enhancement, comfort, and advanced technology features. Now, I would like to hand over to Ms. Fahim to walk you through the sustainability highlights of the company.
Thank you so much, Danial, for this brief and crisp overview about the economy, industry, and the financial performance. I'll now take you through some of the sustainability highlights the company took during the year. On the environmental side, we have installed 9.8 megawatts of solar power across the facilities. The company achieved a 2.8% reduction in CO2, 3% reduction in water consumption, and 0.6% in material consumption per unit, reflecting a continued focus on the resource efficiency across our operations. On the social front, we trained over 1,600 women in bike riding, and our road safety awareness campaigns reached more than 36,000 customers this year. We also logged over 25,000 training and development hours for our people. Finally, through the Atlas Foundation, the group donated 295 million towards the education and health initiatives, reinforcing a long-term commitment to the communities we operate in. This brings us to the end of the presentation. We will now open the floor for questions. Please, we would request to type in your questions in the Q&A tab so that we can answer them one by one. Thank you. So, sir, we have one question from Mr. Talal.
Yeah. Hi, Talal. What threats do the Chinese entrants pose to Atlas Honda market share? Well, at its peak, the motorcycle market in 17-18, at its peak, it was about 2.7 million bikes sold. At that time, the Atlas Honda's market share was just a dash over 50%, and the rest was essentially market share owned by the more than 100 Chinese players in the ICE segment. But since 17-18, there has been a lot of disruption in the market with devaluation, with a commodities super cycle. And since a lot of the Chinese business model has been to not localize, essentially bring in KD kits and assemble them, around 90% of those could not sustain the cost or the pricing level at which they were competing with us. So as of today in the ICE segment, there are only about 10, 12 players left out of 100. And the total market, we estimate that the Chinese own at this moment is around 400,000. So they've come down from about 1.4 million to about 400,000 in the ICE segment. And the main reason is that they had to increase prices. And as they increase their prices, our price point and their price point, the gap was not attractive enough for the customer to choose them. So that particular segment shrunk, and our share, luckily went up from 50% plus to what you guys know. As of today, Palma figures show about 1.85 million units sold, but a lot of the Chinese don't register in Palma. So the actual market is this year around 2.3 million. So in that, your company has about 1.6 million. So we are comfortably in the mid-60s in terms of market share. So over the last decade, we have gained market share. Now, a lot of these 90 who sort of lost their positioning in the ICE segment are trying to make a comeback through not just the EV segment, but also what we call the lab segment, which is lead-acid bike, which globally is not considered a motorcycle. It's more like an e-bike, e-bicycle plus, and they put lead-acid batteries in it. The difference is that this time around, within the EV segment, the Chinese have not been able to penetrate much. The EV segment remains less than 10% of all the new market entrants, but 90% of the new entrants are coming in the form of lead-acid bikes. Jury's out on them, how they're doing. They do well when the oil price goes up above 300. But the main difference between an e-bike, an EV, and ICE is less known in the market. But essentially, an ICE product is durable, lasts more than 10 years, and holds its resale value very, very well. An EV bike, which is essentially a lithium battery, lasts for as long as 5 years before a battery is changed. So globally, Europe, US, Asia, it's the EV segment that is trying to penetrate. But in Pakistan, the EV segment has had a bit of a setback because the price point is above $1,000 and the subsidy is not enough. So the Chinese have tried to come in through the lab segment. That segment, the user only gets about a year to 18 months life and then has to change the battery. So right now we're in the first sort of intro stage where a lot of Chinese are trying this segment. There have been successes and failures, but we as Atlas Honda are watching carefully if the customer goes to lab or not. Honda obviously globally has products in each segment, e-bike, EV, ICE, in all segments. But at this point in time, we're not sure if lab is something that the Pakistani consumer beyond 18 months will stay with it or will kind of grade up to EVs. So we're waiting and watching. So right now I would say there's not been much impact on us. In fact, if anything, in the last quarter when the oil prices went up, our market share has actually gone up as people have come from four-wheelers to us and upgraded from Chinese to us. So at this point in time, we're carefully watching, waiting to see what to do. We'll be ready, but the Chinese per se have not affected our market share.
So Mr. Kumar says, as per the notice here on PF6 on March 30th, Actis is planning to expand its capacity of almost 400 units to take its annual capacity to 2 billion units. By when this new capacity will be added and how quickly it's expected to be utilized to its fullest?
Yeah, great question. So look, our rated capacity was at the end of last year 1.65 million, and we produced 1.6 million. But fortunately, our demand was much more than our capacity. So we decided to increase capacity at least up to 2 million. Now, the real bottleneck comes in the engine plant where investment is huge. As it is, every year we have to invest 3 billion rupees a year. But whenever we try to increase our engine plant by about 100,000 units, you can just as back of the envelope, just imagine it's about 1 billion rupee extra investment. So this year we've decided to increase up to 2 million, which means we'll have to do a capex of between 5 to 6 billion. And incrementally thereon, if demand continues in the ICE segment, then the engine plant will have to be increased by, I would say, 200,000 at every go. This particular capacity will come online, hopefully, inshallah, by December. But as of today, we are able to generate extra capacity through overtime and through the support of our vendor ecosystem.
So the next is from Ms. Maria Abid. She says that GPX has recently launched their bikes. Could you please tell me the impact of these launches on Honda 125 and CB 150? And also, could you share the current sales mix of CB 150 and 125?
Yeah, sure. So GPX is a nice regional player. Really good to see. Players are re-entering. Remember, Yamaha exited and Suzuki is trying to ramp up. So for us, any recognized competitor when they enter the market is not a negative. We look at it as a positive. It means formal sector will grow. Consumers would want to try newer things. Keep in mind one thing. Global Honda last year produced nearly 25 million bikes. And has a global market share of 40%. So in any market, generally in the world, they're number one. And Pakistan right now is number 4 in the Honda family globally. So we have a significant, share of size for them, and they're very interested in ramping up all lines of CC as the market takes off. Generally speaking, GPX welcome. Have they had any impact on us? Frankly, not at the moment. But it's nice if Suzuki and GPX come and help us grow these value-added segments. Honda will react very quickly if there's any customer offtake there. As far as what share, look, generally speaking, this year results reflect that our value-added bikes, which means 100cc and above for this market, are now nearly 40% of the whole market, and in fact, around 45%. So it means 70cc segment is about 50 to 55, and value-added 40.5, around 40 to 45. And so that means as a sales mix, the more we sell of 100cc and above, our margins are higher, we're able to add more bells and whistles, and we're able to generate more bottom line. So the direction is in terms of product mix, yes, the market is growing in 70cc segment, but it's also growing in the higher cc. So both are growing at about the same pace. So that's good for us. But welcome to GPX, more the merrier of these value-added bikes, and we'll be able to introduce more.
Thank you, sir. So next is from Nadeem Ilahi. He was just asking about the next year's gross margin in context of volatility of aluminium, steel, and rubber prices, and what would be the mitigation strategy from us?
Yeah, hi Nadeem. Hope you're well. Very good question. Reality is we are 95% localized, but when we say we're 95% localized, it includes aluminium and steel. Now, these two particular segments, even though they produce the material here, they do benchmark their own pricing in the local market to the LME. So while we can argue it's localized, why are they doing that? One understands, that's the nature of the business. It's just like the oil price. So they benchmark to LME, and anytime there's volatility globally, the local players definitely try to increase the price of the local material. Atlas Honda does have some pricing power. It does. We are the largest buyer of steel and aluminium in the country. So generally, we're able to negotiate well for ourselves and our vendors, but it does pass on. So in the quarter that we've had recently, the markets went haywire. The good thing is that we, as an OEM, try to hold between 3 to 6 months of such stock. So you'll see that in the balance sheet. So we don't think short term. So I think the first quarter blip in terms of margins hopefully will normalize in the rest of the year. So while it's a really good question, we will use our negotiation power as well as volumes to try to make sure it stays about the same.
Thank you, sir. So the next one is from Ashish Kumar. he wanted to know about the expected growth in next 2 to 3 years in the industry.
Yeah, Ashish, what happens is whenever there is price stability in the market, which means three things: local inflation, imported inflation, as well as devaluation. If all these three things somehow stay stable over 2, 3 years, growth comes back. And so we saw this in 13 to 17, and we're seeing this again right now, sort of 24 to 26. And the way this government wants to take it, keep inflation under control, not rely on deval as a measure of exports. So that means there will be price stability. Just for your reference, Atlas Honda just, has not increased prices for now nearly 3 years. The only price increase that's come through has been the petrol levy that the government put in one time last year. But essentially speaking, we've been price neutral for 3 years. And that means consumer comes back very quickly. So last 2 years, we've had double-digit growth, and I don't see any strong reasons for it not to continue. So we expect double-digit growth hopefully next year, and we'll see perhaps if these things stay stable, the hybrid regime stays stable, politically, economically, they continue with this policy, then I think motorcycle in the next 2, 3 years can reach back to that peak of 2.7 million. So double-digit growth is what we are planning, and hence our capex increase.
The next is from Mr. Shankar. He is of the view that the new crop prices have improved. So what impact it will have on two-wheeler segment?
Very positive, Shankar. I mean, rural remains minimum 50%. And if you take semi-urban, which is farm to sort of market towns, it goes up to 60-65%. So we're a little bit different from four-wheelers. People don't quite get that, how a motorcycle differentiates. So 60% farm link, so it has a huge impact. And so we see that as a core reason: price stability, economic stability, political stability, and cash flow in the rural areas. We see that as a plus for that double-digit growth that we are hoping in the next 2-3 years.
So the next one is from Mr. Hamad. He wanted to know that the margin position in the current year, 2026, is it sustainable in the next year, or will it be dependent on the volatility of raw material and other FX conditions?
Yeah, I think I've answered that question, Hamad. But bottom line is that our target is to try to maintain the margins. Obviously, the first quarter will take a slight hit, possibly because of it's extraordinary, but I don't think over the course of the whole year our target will be the 7 to 8% range is where we feel very comfortable, and globally that's where the best companies are as well. So net margins in the 7 to 8% range will remain our target for the next 2-3 years, hopefully. So that means reduce cost, use our volume power to negotiate better, and if there is VUCA environment out there, then absorb it. But one of the best hedges for us is to have 3 to 6 months raw material on our books, so that allows us to stabilize any spikes. So I would say reasonably comfortable. Raw material and of course PKR affect our vendors more than us, and they do try to pass it on, but we negotiate hard. But we want to be fair with them too, because they need to give us volumes that we need.
So, sir, the next upcoming 2 questions are from Mr. Mujtaba from Maple Leaf. I'm going to read 2 questions. The first one is the total market size. What is the total market size of EV bike industry in Pakistan? And what percentage is it of the total market as compared to it? And the next one relates to the Afghanistan exports, that since it has been declined. So what export markets is the company targeting going forward?
Yeah, thanks, Mujtaba. Very relevant. Okay, so let's move, work backwards. So total market size, July, June this year, Palma around 1.8, 1.9 million, rest of the Chinese around another 200,000. So that takes us to about 2.1. And between lab and EV, so please remember, lab is different, EV is different. So lab is lead acid bike or e-bike. That segment is about, I would say both together this year, they're going to try and hit about 200,000. And they're mainly in 3 cities, Karachi, Lahore, and Islamabad. And a good portion is female first-time riders who don't need to travel very far. And so that segment is about 200,000 in our mind in the coming year. So in overall scheme of things, it's less than 10% at the moment. And globally, it's about the same, about 6-7% globally. But EV within that segment, unfortunately, is only 10%. So EV is the 5-year lithium bike that we at Atlas Honda want to see grow more. So because we have products which we can launch very quickly, but that segment remains a small portion. So mainly it's lab, and within lab, there's already a lot of quality issues, safety issues. But let's see how consumers do. There was definitely a spike in April, May in lab, but we've also seen in June, July that it has dropped. So, we're watching how consumers react. So, don't go by what you hear in social media, look at the facts. But right now it's, I would say the overall market is about 2.3 million. So we're still about 400 short of the 2017 target. But hopefully that's where the market will go step by step. On Afghanistan, it's an issue not just for Atlas Honda, it's an issue for the country. And we're very supportive of the country's view. So if in the short term we lose certain products and export market, but in the medium to long run, we want a sustainable relationship. The stop-start relationship doesn't help. It's the same for cement, it's the same for food items, agriculture, lots of things, medicine. But, for us, Honda is being very, very kind. It's asked us to look at the whole of the Middle East, Africa for our products, which means, not Iran, not Afghanistan, but, separately all the other countries wherever we can penetrate. So our view is Central Asia and Africa remains a nice opportunity for us. In some way, it's good that, we're not being lazy and just focusing on selling to Afghanistan. We need to go out and explore other markets, which we are. And there's a decent response for our products. So we're looking at least a dozen more markets to try to offset the Afghanistan export decline.
Thank you, sir. So the next one also pertains to the petroleum levy effect on two-wheeler demand relative to the car segment.
Yeah, not really. No, the petrol levy, they had a climate levy that they tried to put on our sales price last year. So we had to all increase prices. But this year, one believes that, the IFIs have not liked this way of doing it. It's essentially another sales tax that the government is not really using for climate, it's using for revenue. So they have not liked that approach. So this year, there was not a petrol levy, the 1% that was put on last year. So that 1% stays. But we were told that another 1% would be put on this year, but that was not the case for two-wheelers or four-wheelers. But yes, there's a price levy in the petrol price, which has gone up, I believe, from 2.5 to 5 rupees. But no, our customer we produce products that are very fuel efficient, that very durable, that have very high resale price. Remember, people buy our product, the Honda product, Atlas Honda product, not just as a daily use, but also as an investment. It's an asset. So, our bikes don't lose more than 10% of their value over a 2-year period. And if there's devaluation, often they get their principal back. And we have a very good swapping scheme where you can bring back your old bike, get a new one, and just pay 5-10% extra that is in between. So for us, it really is the levy is embedded in the consumer's choice.
Thank you, sir. So another one also comes from Mr. Shankar. He is asking that is the company considering option like split of shares to improve liquidity in the market?
No, we're a joint venture. We're bound by very strong shareholders agreement, and frankly speaking, we're both very comfortable as partners the way we are.
Sir, one is from Mr. Talha Ganatra. He is saying that the last year, as compared to the last year, EV and lab segment sales was 50,000. Over 1 year market has grown 3 times.
Yes, it has. It has. And that's happened it did not grow for a long time until the Iran war came. It suddenly went up. But as soon as the Iran war has come off, the petrol prices come off, demand has also fallen in month on month significantly. So frankly, for us right now, we're observing consumer behavior. We're doing a lot of surveys, research to see what's actually happening, what triggers it, what's sustainable, what's not sustainable. But look, bottom line is what you guys should know is Atlas Honda will come into any segment where there's demand in the two-wheeler. We may be a year late, but we always want to do our homework before we launch, and we will compete. So on that count, do not worry.
The next one is from Mr. Abdul Basit. He is asking that does Atlas Honda benefit from the new auto policy, utilization, or green transport incentives?
It's not clear what the government wants from the new auto policy because it hasn't been announced. So there's, the month of July, Mr. Dar's committee and the PM are still at it. There are a lot of different views. But look, Atlas Honda doesn't need auto policy to localize. We believe that that's a competitive advantage for us. So we will continue to, use localization and our ecosystem as a competitive advantage, not as some government-driven auto policy. Honda's global policy is, you should localize wherever you produce. So it's really good compared to other companies. I think this is a very positive outlook. And green transport incentives, look, they have made it really, really difficult for green two-wheelers and four-wheelers to use this incentive because I think maybe there's lack of understanding. They put a price limit on it, and then they put specific technologies in it. So in fact, 98% of the so-called green transport is not using the incentives at all. So the government, if it wants to give incentives, it really needs to see the 1% levy that they've put on. They're not able to distribute it. So we're talking to them and they're listening to us. And I would say, as far as two-wheeler auto policy is concerned, Atlas Honda is reasonably happy with the direction. We don't have many issues with it.
Thank you, sir. So the next one comes from Mr. Bilal Zahid. He is asking that Honda has priced its EV bike at twice the price of a Chinese EV bike in the market. Is Honda not catering for a lower tier EV market?
Yeah, so look, we are in the R&D phase right now. We never rush in because remember, we want to see if the consumer views EV as an asset, as a consumer durable, or is the consumer looking at it as a 1G mobile phone? Remember, by companies like Honda can produce 2G, 3G, 4G, 5G, whatever equivalent bikes, and they have it in their arsenal. What we will not do is, launch a product with used lithium, used lead acid cells. We will not do that to try and, cheat our way into a segment that is not as aware as people like you are about safety. So for Honda, safety is the most important. So right now, what we've done is we've launched in fact, Maheen, it's our second product. We had a Bentley E product that we launched for institutional clients. Now we brought in an Icon E. All one can say is and hopes is that the lithium segment is the segment that is promoted by the government. Lithium iron phosphate, lithium, because that's safer. And if people do want to go for lead acid, then the safe lead acid is basically a one-year bike. And second for you, messages, will we localize Icon E, the light bike that we introduced? Yes, because the results are pretty decent, in fact, better than we expected for our bike. So we're going to start localizing it from this year onwards. So it'll take 2 years, maybe 3 to get up to the ICE level, but we're going to start on Icon E. And will we enter another segment below Icon E? Yeah, I mean, jury's out. We'll watch, we'll see. But as of right now, if 90% of the bikes you see or 90 are Chinese, it's okay. Let the segment grow. You know, remember, in ICE, the segment went up to 1.35 million. We were not in that segment. But as of today, we are targeting to be a 2 million player.
The next one also comes from Mr. Shankar. Are there any changes in duties on parts of bike industry in the new budget, which can impact positive or negative to the company?
No, there's a lot of rumor, but nothing has been announced, and we're waiting, like everybody else, what the new auto policy will be. The tariffs have not affected two-wheeler.
The next one is from Ms. Sumbul. Given the current economic environment in Pakistan, what are the company's biggest challenges, and what gives company the confidence about future growth?
Well, look, the current economic environment is stable, and people like myself who are able to speak to the government pretty regularly, we always say, don't go for that, instinct for high growth when we're in a stabilization phase. So we say, keep it steady, keep focusing on growth, but steady growth, which we can afford. We need to live within our own resources. So with that in mind, from 3% growth to 4.5 is good. So we don't want to, we get nervous when suddenly the government chases 6% growth, because that typically means we'll import more than we can afford, and suddenly, we'll need deval to balance and go back to the fund. As of right now, the way they are managing, I think we will exit the program if we want to, but having some sort of technical collaboration with the fund even after the program would be a wise decision. Keeping that in mind, we need to watch the shift in CC behavior, which means are people upgrading faster up the CC chain than we're planning our lineup? And if that's the case, then we have to sort of prepone our new model introduction.
The next one comes from Mr. Syed Zaidi. He wanted to know that what would be the biggest drivers of earnings growth for the next 3 to 5 years, and what key milestones should a shareholder be monitoring to assess whether the company is on its track?
Yeah, good question. I think volume is the first driver. You should keep an eye on how is the monthly volume doing, how is the quarterly volume doing, year-on-year growth. That's number one. Number two is I'd keep an eye on how we're penetrating the after-sales segment, which means how our dealerships, when you go out and about, you see our dealerships increasing, our boardings increasing. That would tell you service is increasing. People are coming back to the company's outlets. We have 10,000 outlets, 1,000 dealers, but 9,000 are outlets which serve customers in form of service and spare parts. I believe after Muller and Phelps, we're probably the second largest. But keeping spare parts as another thing to look at. And the third thing would be obviously, the product mix. If it's higher CC segments, obviously margins are higher. And the last is to watch, how is our treasury segment doing?
Thank you, sir. So the next one is about the demand outlook in the coming years. How much is dependent on remittance inflows and consumer financing availability?
Both are alpha factors for us. Which means the previous question, you could add these two. So for example, remittance inflows adds to the rural semi-urban segment generally. And the last 2-3 years, consumer remittance coming in has really helped our higher CC segment. So when remittances grow, generally these people come back home or send money, and there's pride in buying a differentiated product. So these guys like to buy CG Self, for example. They'd like to buy 150cc, for example. And if remittances inflows trend increases, then I think Atlas Honda can introduce even higher CC products. And consumer financing, we're not that reliant on it. I wish we were, because right now our dealers themselves offer installment schemes. The company doesn't and doesn't need to, but the dealers do a great job. But having said that, we've had 3-4 banks become major players in the last year. So if consumer financing kicks in, I think Atlas Honda is and will be the major beneficiary.
Thank you, sir. So the second last questions up till now. Is the 2 million bikes capacity, is it a dedicated capacities for different CCs, or any more can be produced within that 2 million?
No. I mean, look, generally you can say, not really. We can, whatever model mix comes in, we can. But specific machineries in the engine plant, a cylinder head is made with a specific machine. Die casting is made with a specific machine. But we lean on our vendors, which are 125, and a lot of them are very big companies that could be listed in their own rights right now.
The last one is again from Mr. Mushtaba. Shed some light on the solid growth of our spare parts segment. What is the strategy going forward?
Look, this is possibly one of our I would say biggest opportunities. There's spare parts in the past were smuggled, under-invoiced, and kept the OEMs out of this segment quite successfully. I don't need to take names. You'll go out and you'll see brands out there, but essentially they're the informal sector. But the government has also tightened up, but also our vendors have stepped up. So imagine our vendors are now competing with Chinese smugglers. And the vendors have got it, but they can get a lot of volume out of here. So we've had nearly a 30% growth last year. I think that was exceptional. But going forward, I think growth rate in the next 2 years of between 10 to 15%, 10 to 20% is possible for the next couple of years. If the government keeps this really tight and FBR really goes after the IP infringement people, the smugglers, etc.
Next question is regarding the non-compete agreement with our vendors. Tomorrow, if they launch their own local brands, since they know the signs of the bike. So do we have that non-compete agreement with our vendors?
Look, it's ethical and non-ethical, these agreements, whether we have them or not, we do. We have an understanding, we have agreements that, this is specific technology. But, this is Pakistan. Unfortunately, it's tricky. But our vendors, the 125 vendors that we have, I think they would think twice before they do this. Every part we make is not given to vendors. In-house, the core technology is still in-house, which is about 40%. So the engine plant is in-house. So it's not easy for somebody to come and copy paste what we do.
What are the key opportunities and challenges expected next year?
I think this has been answered. Really, the opportunity is stable prices, stable economy. As long as that's good, this war doesn't get out of hand. Even the first quarter, there was war, but Atlas Honda, you'll see the results. The first quarter volume results. You'll see the consumer hasn't backed away. So I think there is an opportunity even in the threat. But the challenges are, as one has mentioned, we've got to stay close to the customer, changing behavior of the customer. We've got to keep a focus on the competitive environment. We cannot be arrogant. We cannot be, fall victim to hubris. I think the hallmark of this company and the group is humility, respect for the competition, and having good relation generally with our dealers, vendors, government, etc. And that allows us to respond quicker. So that's the challenge. Will never go away. And we should be ready for the unexpected challenge. And I think that keeps this company on its toes.
Thank you, sir. The last question of the audience is regarding the spare parts. The 31% growth as our segment has seen this year.
Yes, I've answered this question. I think yes. 30% growth last year. We're targeting double-digit growth for the foreseeable future.
So that brings us into the questions that were raised in the question and answer tab. Is there anyone who would like to comment or raise a question verbally? If we have more 5 minutes remaining, or shall we call up a session? So, sir, up till now, I think it's all the question and answer sessions have been answered. Since I believe that the sufficient responses have been given to the questions raised by the attendees. So we may call it off. And yes,
thank you, Mahin, Daniel. Thanks to this technology, one can be anywhere in the world and attend. But most of all, I think I want to thank the research and the shareholders who come and attend this research thing. So thank you rather than thank us. It's good that you guys keep asking questions, keep us on our toes. But bottom line is that this interaction is helpful for us. So thank you for taking the time to attend. And fingers crossed, your company, this group continues to deliver better than expectations. But we hope that if you ever see us being out in terms of hubris or arrogance, you'll call us out. But otherwise, thank you very much for coming. Thank you.
Thank you so much, sir. Thank you, everyone, for joining us today for today's session.